Hey folks, David Frost, LazyGapTrader.com. In this video, we're talking about day trading, but more specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. I do a couple of things. The first thing I do is teach a course, and in the course, I teach two gap trading strategies. The first one is known as the morning gaps. The morning gaps are when stocks are gapping higher or lower at the open relative to the prior trading day's close. It creates an opportunity for traders. An opportunity for traders that can identify a specific price area where these stocks will A, be drawn to, and B, have a price reaction from in the other direction. In my course, I teach traders how to find, calculate, and identify exactly where these price levels are. The second part of my course is I teach what's called a gap fill strategy. When stocks gap higher or lower at the open, they leave what's called an open gap. Open gaps will ultimately be filled at some point in the future. In the course, I teach traders how to track them. I teach traders how to trade them. Not all trades are created equal. Not every gap fill trade is a trade that we're going to want. So I teach traders which ones we want and which ones we don't want. In fact, here's a copy of the spreadsheet that I give anybody that's purchased my course so that tracking the gap fill trades is a piece of cake. This spreadsheet pulls the data in from Google Finance so that we have real market data. It sorts automatically. It makes life easy. I give you a copy of this spreadsheet in the course at LazyGapTrader.com. The other thing I do is I give traders an opportunity who want to get them a copy of my gap trades each and every day sent to them via email at 9 o'clock in the morning Eastern Standard Time, 30 minutes before the market even opens for trading. Here's a copy of today's list that went out to my traders. Now, today was Monday and the volume was relatively light. There was not a lot of stocks gapping higher or lower at the open, but there were a couple of opportunities. The first one was Amgen. It never hit its level we were interested in, so it becomes a no trade. Unless stocks come into the specific price level that we calculate, it becomes a no trade. We're only interested in trading stocks on our terms at our price levels. The second one was Blackstone Group, BX. I say gap higher. Resistance levels are 3206 and 3337, and then I even gave a third level in case the stock continued higher. Stop and profit target is about 20 to 40 cents. Now the stock was moving higher close to the open, so I sent out a subsequent email to my traders that the first level can be considered high risk. So I wanted them to be aware that if they weren't interested in taking a high risk trade, then they might want to look to the second level. Let's go over to Blackstone and see exactly what happened on the chart. So on Friday, Blackstone Group closed at 29.87. This morning it was gapping higher. It opened at 31.49 and continued higher. Our level identified was $32.06. Now ideally, we want the stock to come into the specified price level as quick as possible. This one came up short. You can see in this candle making a high of $31.99, just 7 cents short of the level, and then it pulled back. However, the stock traded higher throughout the remainder of the trading day. It did come into the level about lunchtime and even pulled back at that time. It produced about a 25-cent trade. The low in this candle was 31.75, so slightly more than a quarter, about 30 cents on the trade. That's not the exact trade we were looking for. We were looking for this pullback in here. That's the one that produced more profits. But we didn't get it because the stock didn't hit our level. In my course, I teach traders why this stock and this trade had reduced probabilities because of the way it came close in the morning and then came back into the level. All this is explained in detail in my course. I explain why the probabilities of success of this trade changed as a result of what happened in the morning. That's just a small component of the things I teach in my course. I teach everything traders need to know in order to trade the gaps successfully. But case in point, you can see the power of the levels that I teach you how to identify. Even though the stock came close and pulled back in the morning, it still found resistance at the $32.06 level. I explain exactly why this is in my course. I teach traders how to calculate the levels. I teach traders how to trade them properly. In fact, I even teach traders how to turn some trades into risk-free, emotionless trades. And there's a whole video module just on that topic alone in the course. If you want to learn how to trade the gaps successfully, come over and check out the course at lazygaptrader.com. I can teach you everything you need to know in order to trade the gaps successfully. I'm David Frost, lazygaptrader.com. Thanks for tuning in, traders.